Good afternoon, welcome to GrainTV. It's December 3rd, 2013. I'm Logan Burgess. To my right here is Cody Bills to help break down a mixed trade that we saw on a Tuesday in the grain market. Jumping into the quotes here, we see corn up 6 3/4 for March. January beans down 1.5 pennies, and we had Chicago wheat down 6.5 cents. We're happy to announce we now have a great mobile trading app available here at GrainHedge. If you want to take a demo of it for yourself, visit us at grainhedge.com. It's available now for iPhone, iPad, Android, and tablet. Cody, like I said, though, a mixed trade today. We saw relative strength out of corn and wheat. Soybeans kind of ground lower here in a mixed trade. We had some positive action, ending the day down 1.5 pennies, as I said. What's your take on that market?
Well, you know, yesterday we had a very ugly-looking candle, and I suspected that it would kind of usher in a follow-through. We did get that follow-through in the overnight session. We were down as much as 7 cents. Yeah. But then in the morning, we rallied right back up. We had a pretty strong morning. Unable to hold on to those gains, though. We just kind of trickled lower for the remainder of the day. My thoughts are we had a little bit of support here from the highs that we set back in kind of in November. I think that was offering up a little bit of support today. Wouldn't be surprised if we chop around these levels maybe for another day or two, but I think we'll resume this this fall here, maybe down to 13, if through 13. Could get down around that 1291. That's an area where the 50 and the 100-day moving average are both crossing right now. When you get those two averages together, oftentimes it can add a little bit more potency to that as an indicator and a support level.
Yeah, you know, Cody, I agree with you. I think today's action was largely technical. We certainly had a couple stories, though, in the market that weren't helping the bean market out. First of all, being Informa here raising expected Brazilian production to 88 million tons. But in general, though, that's in line with what the USDA came out with in November, so not a major story there. One story, though, that's kind of developing at the moment seems to be this China story. We saw a cargo of corn rejected recently by the Chinese, and there's some concern that we may see that for soybeans as well. So that's another story that didn't help out the action today. I agree with you, though. I think it was largely technical. Corn, though, seems like a little bit of a different story. I know you talked about it yesterday on GrainTV. A pretty supportive candle here was printed, and we saw a little bit of follow-through in today's action.
Yeah, absolutely. You know, Logan, you mentioned that China story, and that's pretty bad news. People are a little bit concerned about the demand picture here going forward because you're seeing these cancellations. There's a rumor out that possibly 6 cargoes for January delivery could be canceled. So this is all pretty negative. And I think what's interesting is we saw corn rally in spite of that bad news. I think yesterday it was a pretty bullish candle like we talked about on the show. I wouldn't be surprised if as we broke down into new lows, people thought we were going to make another leg lower. I think shorts got caught on the wrong side of the market. I wouldn't be surprised here if that's helped out the rally here today. I think if we get through that 433 area, we could be moving up to around 440, maybe even 450.
Yeah, you know, with this China story in mind, we still have very strong export sales to date here, and I think another thing that's going to support corn here moving forward should be the ethanol story. We know right now ethanol crush margins are exceptionally strong, nearing $4 a bushel. That's a price level on an ethanol crush margin we haven't seen here really in about the last year and a half. In large part, that has to do with how much ethanol has been rallying here over the last week and a half or so, 2 weeks. Bottom line, though, right now ethanol facilities have a lot of incentive to crush corn. I think we're going to see that start carrying over into futures, and we've talked about it on GrainTV here. That's a big-time basis story. We continue to see ethanol facilities very aggressively bidding corn, so if you have an ethanol facility near you, but you may not always sell your grain to that ethanol facility, it might be a good time to see what they're bidding. It might pay to truck it a little bit further than what you might normally.
Yeah, and of course, you know, you call them up, you might even be able to negotiate a little bit more of a premium if you sell a little bit more volume to them. So the bottom line here is that it looks very interesting with corn having a little bit of relative strength. That's certainly a role reversal from what we were used to in the last month here. Other than that, guys, that wraps up today's show. And if you have any questions about what we talked about, you can always give us a call at 877-472-4607. And remember, you can go ahead and take a demo of the Fire Tip trading platform and the mobile trading platform. Thanks a lot for tuning in. We'll see you here tomorrow.